We're at a half hour away from the open in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Stephen Engle with Yvonne Mann.
Yep, our top stories this morning. Asian stocks starting the week higher with the U.S. and China ready to resume trade talks. The flow of rare earth minerals likely to be a key focus of talks in London.
China's monthly economic numbers out this hour set to show a disinflationary drag lingering, with trade momentum also slowing.
And protests over immigration raids escalating for a third day in Los Angeles after President Trump calls in the National Guard, a move the city mayor says is causing chaos. Well, happy Monday to you. We're taking a look at when it comes to markets. We'll get to the LA situation, which is fast and happening quickly here at the ground right now. But certainly we'll watch what markets are really focusing on here this morning. Certainly the dollar is a little bit softer, but you take a look at what we've been seeing, what we're leading up to this week, Steve. It's the trade talks in London between the U.S. and China after that phone call between Presidents Xi and Trump. And of course, we have a lot of bond auctions to talk about in the U.S. as well. So potentially there could be some pretty interesting sort of posts and milestones we need to deal with.
A lot of trade data and obviously inflation data coming out of China ahead of those trade talks coming in London later today. They could last a day. They could last up to 4 days, according to He Lifeng's schedule to the UK. We don't know, right?
Yeah, we'll talk about what's on the agenda potentially here. Rare earth certainly is a key focus here. But in terms of markets, we actually are seeing stocks continue to tread higher here, up about 0.5%. U.S. futures are a little bit heavy. So is the U.S. dollar here right now. We did kind of eke out a slight gain on that dollar index last week after that strong U.S. job support. So slower but steady jobs data. This certainly is what led to Treasuries to really fall off across the curve on Friday, and traders starting to trim those Fed cut bets. Now, you take a look at that now. U.S. Treasuries are slightly, the yields heading lower, so reversing some of the initial moves that we saw last week. But yes, Aussie and JGB yields are heading higher in the Asia session here. Gold is actually heading lower. Iron ore also on offer here this morning. Dollar yen certainly one to watch here, just given what we've been seeing, right? So there's a lot of talk about this Operation Twist and how Japan is going to consider shifting more of its debt issuance towards the short end of the curve. So watch dollar yen. Nomura has a call saying that the currency could actually rally 6% higher against the dollar in the coming months, just given what we heard also from the U.S. Treasury calling for the BOJ to support the yen with higher rates. So that certainly is still one thing to watch. But Taiwan's coming online, is doing quite well. Nikkei also and Kospi is up more than 1%. So stocks are still doing quite well in the face of all these sort of, I guess, headwinds, what you're seeing when it comes to what's coming in China, right? So trade talk certainly is one sort of booster in terms of sentiment. Futures are pretty flat in China here right now. We're watching very closely that exchange rate, whether that is becoming a topic in London later on today, too, Steve.
Yeah, Yvonne, of course, this is the China Show. We're going to talk about China data and, of course, those trade talks. It's a top story across the rest of this week. But right now we have to really look at Los Angeles, because this is a fast developing story on the streets of Los Angeles. Demonstrations over U.S. immigration raids have escalated for a third consecutive day in the Los Angeles area, with vehicles torched and tear gas fired. Earlier, President Trump wouldn't rule out deploying U.S. Marines if needed after sending in thousands of National Guard troops.
Troops everywhere. We're not going to let this happen to our country. We're not going to let our country be torn apart like it was under Biden and his auto pen.
What's the bar for sending Marines to...
The bar is what I think it is. I mean, if we see danger to our country and to our citizens, we'll be very, very strong in terms of law and order. It's about law and order.
And Bloomberg's national immigration reporter Alicia Caldwell joins us now from Los Angeles. So, Alicia, for us waking up here in the Asia Pacific, can you put this into perspective? How concerned should we really be about what is unfolding potentially when Donald Trump is talking about having troops everywhere and potentially even Marines? What's the latest in the situation there?
Well, at the moment, this is all unprecedented territory. We've not seen in the U.S. National or federalization of National Guard troops since the 1960s. It was during the Johnson administration over civil rights protests, and those were to protect the protesters. In this case, sort of rather rapidly, things unfolded yesterday with a raid at a Home Depot in suburban Los Angeles. and troops were deployed under the federal government guise. So we don't know what happens next. What we do know is protesters are still in the streets here in Los Angeles. As you mentioned, there's been a number of cars lit on fire, particularly the Waymo self-driving cars. There's been deployment of tear gas and other sort of less than lethal munitions by the Los Angeles Police Department, and earlier in the day by the National Guard and elements of the Department of Homeland Security. So it's a tense situation that continues to unfold. Crowds have thinned a little from the peak today when the local police department, the Los Angeles Police, declared it an unlawful assembly. But people are still in the streets. People are still protesting. Don't expect this to end tonight. In fact, there's a protest planned for tomorrow afternoon. And we'll just have to see overnight how things evolve. But according to the mayor and the governor here in California, the deployment has heightened an already tense situation as ICE has expanded its footprint across the United States, and particularly here in Los Angeles, with raids in various business districts, and as I said, at a Home Depot yesterday.
And Alicia, LA seems to be sort of the symptom of what we're seeing. Heavily Democratic states and their ability to resist the Trump administration's agenda in some ways, right? How unusual is it to have the National Guard deployed without a request from help from the state?
It's incredibly unusual. Again, the last time this happened was Lyndon Johnson deployed National Guard troops to protect civil rights protesters. So we've not seen this in 50 plus 60 years. So what we're seeing now, as I said, is unprecedented. Right now, according to Mayor Karen Bass, those National Guard troops are strictly at federal facilities, federal buildings downtown, protecting those structures. And local police, the Los Angeles Police Department, is building sort of a barrier of space between the National Guard troops and LAPD. They are not working hand in hand on immigration. LAPD does not participate in civil immigration, but I'm told, or the mayor rather says, they are coordinating. They are in communication, which I presume is a good thing, that they are, those authorities are coordinating with one another, at least in the response to what is now a civil unrest or protest. The federal government has described it as a riot. But again, it's important to know that these protests started rather small and rather localized around where ICE operations were taking place, both on Friday in the downtown corridor and then yesterday in a place called Paramount, California. They popped up almost sort of organically. Now what we're seeing is more organized protest, a larger presence of people, as again, cars being lit on fire over the last couple of days. We're starting to see the tension and actions on behalf of some protesters rise. And again, that's being met, with force, and it was met initially with force. And so it's hard to know, what begets what, but here we are for the moment. Tensions are very, very high.
All right, Bloomberg's national immigration reporter Alicia Caldwell, thanks for the update. We'll be checking back in with you. What now to look for in the greater China region as we begin the work week here? U.S.-China trade talks obviously are set to begin in the U.K. He Lifeng, you see there, leading the Chinese delegation, and also, of course, Scott Bessent, the U.S. Treasury Secretary, will be leading a three-headed, not monster. What was I going to say? Delegation with Howard Lutnick, of course, the Commerce Secretary, and the U.S. Trade Representative Jameson Greer leading the U.S. side for potentially several days of talks. Also, of course, we're going to be looking continually at rare earth stocks. The U.S. point is they want to see the relaxation of those export curbs from China on rare earths and rare magnets and CPI data. Is it going to be a continuation of 4 consecutive months of deflationary consumer prices, or as Eric Ju of Bloomberg Economics says, it's going to break the string because of Chinese holiday spending?
Maybe it could be a one-off. We'll see for those CPI numbers here. Let's get to our top story, one of them as well. Top trade negotiators from the U.S. and China are set for talks in London later today and aimed at diffusing tensions over Beijing's rare earth export restrictions. And the Trump administration wants to restore the flow of critical minerals crucial for everything from cell phones and EVs to military systems.
Those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva. And President Trump, being a deal maker, talked with President Xi, and he said, let's take, our senior guys, the people who are the same level as you, let's have them meet somewhere, and let's get these things cleared up, and then we'll clear up what you don't like that we've agreed to release on our side.
And for more, let's bring in our senior editor, Derek Wallbank, joining us live from Singapore with a preview. And Derek, it's interesting. You take a look at Geneva. We saw tariff levels that basically led to trade embargoes, so it was a win-win for them to talk. Second round in London, seems like that low-hanging fruit is not quite there. What's on the agenda today?
Well, I think the rare earths minerals clarity is going to be a real guidepost for the talks, even though the overall U.S.-China trade situation has way more than rare earths. Rare earths is a really great view into it. It's something that's a critical part of supply chains for a number of things, from defense to consumer. And it's something that the United States wants to do more of locally, but doesn't have the capacity right now. So it's very reliant, as is a lot of the world, on China. The U.S. thought that it had a deal. China thought that they had a deal. That seems to have broken down a little bit since then. This is what spurred these new talks here. There was a sort of tangible give on the United States side. If you sort of take inside the Trump administration's viewpoint, they saw that they had a very tangible give to the Chinese on lowering the tariffs. China matched on lowering the tariffs. That was all fine, well, and good. But the U.S. thought that there was a difference in the intent there on the rare earth minerals, not a process by which we can start easing this, but this needs to ease right now. China obviously had a different perspective there. Getting onto the same page there is going to be a really important thing here. Stephen mentioned quite correctly the level of seriousness of the U.S. delegation as comprised of who they are putting forward. That's Scott Bessent, that's Howard Lutnick, that's Jamieson Greer. So that is all of their big top voices on trade are all going to be there, all in the room at the same time in London. That's going to be a big issue. The other thing that I would flag that's sort of looming over this, it's kind of on a sidebar, but it might prove a complication, is that the U.S. is not really a big fan of China's plan to build a very large new embassy in London. That's been a key local consideration. It was off. Now there's a request to kind of bring it back on again, but that is maybe something that could prove a little bit of a complication. It's a point to watch as both sides are sort of lobbying Keir Starmer's government, notably Starmer, the only sort of friendly world leader who's emerged with a trade deal in principle so far from the United States side.
Hey, Derek, we don't know how many days these talks are going to go. It's going to be kind of determined, I would assume, by the tone that is set today in the first day. What would be considered successful? Because last week when you had the phone call, the measuring stick for success was, hey, we're going to continue to talk. But there has to be some progress. And from my viewpoint, the Chinese are not going to give much on their leverage, which is on rare earth metals and magnets. They're not going to give too much, but maybe a little bit. Would that be success?
Well, I think, Stephen, look, my first point of success is, does the English language and the Mandarin language readouts, do they match? Are they the same thing? Are the U.S. and China walking away with the same understanding of what they've agreed? And that is really, the bar is on the floor so low we can trip over it. But that's kind of where we are, because that's what sparked the last dispute. So I think that's one thing. Let's look for tangible releases on the rare earth, not a commitment to release, but actual easing. You'll be able to see that in different ways, because businesses will be able to say, look, we're getting these applications approved, we're getting shipments, things like that. You can watch some of that in data, so that's going to be a little bit helpful to see there. And in a larger sense, we are still a little bit kind of playing a role as the tone police, watching to see if the tonal language shifts here and seems like it's more towards accommodation rather than ramping up. I mean, both sides have said that they have the ability to turn the screws back on, but both sides have also said within the last month that where things were was an unacceptable level and not where anybody wanted it to be. So let's see, I think, both on the tangible side of rare earths, but also on the tonal side of these. And as I say, I'm very much watching to make sure that when both sides are giving these readouts, I'm reading both sides, the Chinese version and the American version, to see if they're basically saying the same thing. If not, that could cause future problems.
Yeah, we're looking for any sort of consensus there. Derek, thank you. Derek Waldman, our senior editor, joining us out of Singapore. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. All right, we're focusing on futures here this morning. They are a little bit punchy this morning and getting a little bit better. That reference rate just crossing your Bloomberg here, pretty much in line with estimates as well. But we're watching very closely trade talks in London later on today. Also, we have CPI and trade data out of China coming out as well. For more in terms of risk appetite, what things are doing, there's no shortage of news, obviously. And what does that mean for the ETF world? Let's bring in Douglas Yones, CEO at Direxion, which specializes in leverage and inverse ETFs. Welcome to the region. Welcome back.
Thank you.
You're 8 months into the job. Tell us a bit more about, there's just so much going on.
Yeah.
How's business? What are clients and the like telling you?
As you mentioned, Direxion ETFs, we specialize in leverage and inverse ETFs. So we trade the headlines. Our investors trade the headlines. This is Direxion weather. There's no shortage of headlines. I think we're breaking records in terms of volatility, number of days that we're breaking at least 1% thresholds on major headlines. Most of our ETFs cover that. We cover the Mag 7. We cover Tesla. We cover NVIDIA. These are the big headlines. We have an ETF that covers U.S. interest rate futures. So pretty much everything that's making the shockwaves, that's where our investors are trading right now.
So where are the flows going right now? Obviously, we headline surf here at the China Show every single day.
Yes.
And Tesla, you mentioned the one example, that's been like this on the news flow because of its ties to Elon Musk and Donald Trump. So where are you seeing most of the interest in the flows? Is it out of the U.S., into the U.S., into Asia, where?
Yeah, it's one of the things that if you are surfing flows, you can surf them through Direxion ETFs. That's what our investors do. So we tend to see a lot of buying the dip. So when Tesla headlines are negative for the stock, we see a lot of 2x Tesla come in. So TSLL would be our long Tesla product. Semiconductors are just always popular. I think one of the most popular ETFs worldwide, especially through the Asian markets, but in the U.S. is SOXL, SOXL. That's the 3x leverage semiconductors. We see investors tend to, again, buy the dip. So we saw record cash flow in those areas for the first few months after Liberation Day, especially as we saw a lot of choppy markets. Investors really came in. That's worked out well for that trade. Semiconductors were up dramatically last month. And so really, where you would say headlines, that's where we're seeing cash flow. We're seeing cash flow into gold miner ETFs. We're seeing cash flow on the dips with U.S. Treasury markets. So depending on how the news and headlines plays out in the U.S. markets this open, I would expect if we see futures drop, we'll see cash flow in on SPXL. That's our 3x S&P 500. A lot of investors are really bullish. They'll trade these dips, and then vice versa, when the markets will really rally, because we've seen that, they tend to exit their position. So again, Direxion ETFs for short-term traders, those who are really trading the market for a couple of days, they'll trade in and out of our ETFs.
What does that tell you about the products that you may be planning on launching? You have some single names in Hong Kong?
Yes.
What's the plan now?
Yeah, you bring up a good point. Our single stock ETFs, that's where we'll take an individual name like the Mag 7. You can kind of go through Apple or Google or Tesla and NVIDIA, and we'll put 2x leverage to the upside there, and we'll also give them 1x inverse for those that might want to either take a bearish view or take a hedging view. We've seen a lot of hedgers come into places like Berkshire Hathaway this year. And so we've seen a lot of cash flow. Obviously, Tesla's our biggest one, but NVIDIA's done exceptionally well. More recently, some of the Palantir, 2x Palantir has done really well. So investors really like using those ETFs for short-term moves. Again, these are not long-term buy and hold vehicles. You're playing with leverage. If you're not sure how leverage works, don't use them. Right. Come to our website, learn. It doesn't take long, but it's really important they're short-term ETFs.
Then what are your biggest opportunities in this part of the world? I understand you're on your way to South Korea. That is a place where leverage ETFs, you're not allowed allowed to market them, right?
We don't market directly to retail in South Korea, but I am headed there mostly, as you said, just to have conversations. You know, the Korean market, you can see the assets. Korean investors tend to gravitate towards leverage. They're used to leverage. We see a lot of cash flow moving into our lineup of ETFs. You know, this, as always, semiconductors is very popular in Korea. They tend to really trade technology. We see a lot of cash flow moving in and out of technology. The Mag 7 names are very popular, but semiconductors, that seems to be what Asian investors really like trading the most.
Do you have plans to list in the Asia Pacific?
We're looking at it. You know, this is a big region for us. We have a lot of roots here. We've been in this region for quite some time. We've got a headquarters here in Hong Kong. We love educating the investing public, and Asia Pac investors really are gravitated towards leverage. It's common here. So we're really focused right now on education in the region, putting our, we've got this really interesting university. You can take a university course, making sure it's in local language, making sure it's regionalized so that if an investor is trading leverage, they know exactly how it works.
A lot of issuers are consolidating. What do you see the trends happening there?
We are not consolidating. We're growing. We're going the other way. I think Bloomberg itself reported on our filing earlier this year. We filed for well over 100 new ETFs. Yeah. We have over 107 now, so we'll probably double our lineup here in the next couple of years. We're seeing a lot of tremendous growth. Globally, investors are really gravitating towards leverage. The headlines are there. We're seeing the markets move 1%, 2%, 3% to the upside and downside each day. Direxion ETFs allow investors to trade that, to really lean in on both positive and negative headlines. That's exciting. That's a fun part of the market. That's where investors are gravitating. So our growth rate has been quite strong. Cash flow year over year in the region is breaking records. Cash flow in the U.S. is breaking records. This is Direxion weather.
Yeah.
All right, Douglas, we got to leave it there, but thank you. Douglas Yones there, CEO at Direxion, joining us here. Plenty in terms of trends and what he's seeing in the ETF world. Certainly dip buying among some of the Mag 7. That's really interesting as well. We're taking a look at how futures are faring here right now. And yeah, Hang Seng pre-market is actually looking pretty good. So stocks are still doing quite well. I think the optimism still around trade talks between the U.S. and China. That's still lifting the equity space here this morning. And we take a look at the currency, flat at 7.18 against the dollar. This is Bloomberg. All right, if you're an equity bull, it could be a good day here today. We're focusing on what's been going on between the U.S. and China. So those trade talks continuing. If we continue this momentum and at least optimism after that Trump and Xi call, we are seeing HS Tech is up some 1% already in the pre-market. And what is really lifting a lot of this? Well, there's a lot of good news when it comes to rare earths, right? That, you know, that there has been at least some clarity maybe. Well, that they could be starting to approve these licenses. We saw certainly Reuters say that maybe they've done some for some of the U.S. automakers.
I think investors are latching on to the prospect that there could be some movement on that issue. We don't know, though.
We'll see. We'll get the details on what more they can do in terms of the rare export sort of things, rare earths, I should say. Yeah, we got the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets. And yes, China inflation numbers are just about to cross your Bloomberg here right now. But U.S. inflation numbers are coming later on this week. I promise you that. So you take a look at when it comes to the Hang Seng. Yes, pre-market is doing quite well here today. I think equity traders are just glad to hear that we're seeing more talks between U.S. and China, and that, you know, that London is calling, right? That we're seeing the likes of Lutnick.
A little clash reference there.
Yes.
That's nice.
Trying to bring a little culture to the show. So a lot to talk about, right? We talk about rare earths, but there's so much on the agenda, Steve, right? Whether it's about tariff levels, whether they stick to that. They have till August with this truce. Yes. But there's also about student visas, the like, as well.
And the summit.
And the summit.
Are they going to have a summit? Or
Are
is
they
it
actually
going
going to have the state visits too, right? There's a lot of talk. Jing from HSBC is right next to us. She's ready to talk about it. Let's get to the market open here first and foremost, though. We are seeing at least all signs point to decent gains in the equity market here today. CSI 300 onshore is seeing slight gains, though. I think more of the action is in Hong Kong. But you are watching the likes of what we're seeing with the tech space, EV space, rare earth, certainly. I think CATL kind of is part of that sort of concoction, but we're seeing CATL A shares at least lower here this morning leading up to these trade talks. Commodities seem to be slightly on offer, and crude actually recovering, right? We're up about 1.5% for oil prices there. Take a look when it comes to the Hong Kong Open. Yes, we'll get to those inflation numbers in just a bit, but yeah, Hong Kong is doing quite well, just given what we saw in the initial stage. There you go. HS Tech is up 1.2%. Hang Seng is up close to 1% gains there already. It really is the tech space that's helping things. You look at how Tencent, Baidu, Alibaba are all doing quite well. Meituan's up some 3%. So there you go. Offshore renminbi, one thing to watch here, given some of the dollar weakness that we're seeing here. So a little bit of strength coming through the currency here. But yes, the inflation numbers, Steve, coming through. Your initial take so far?
Well, yeah, falling 0.1%. The consensus was for 0.2% fall. So it's a continuation of the trend of, I think, a fourth consecutive month. First time, I think the last time they were up was in January. So again, it wasn't a bad set of numbers. They had two holidays in May. Yeah. At the beginning, Labor Day, and then the Dragon Boat holiday at the end of May. Maybe lifted some consumption spending and transport and this and that, non-food inflation. But PPI, that continues to be a drag. They're falling 3.3%. The estimate, I believe, was 3.2% fall, a consensus estimate. So factory gate deflation persists for a 32nd consecutive month.
Oof. Okay, let's bring in more analysis now. Jing Liu, Greater China Chief Economist at HSBC Global Research. Better than expected, not really for PPI, but what is your response to all this right now?
This is more or less as we expected. So basically, the deflationary pressure is still there. For CPI, I'm less worried because we see both the food and oil prices going softer, which might be a big drag for the CPI. For the PPI, if we look through different industries, we can still see the capacity utilization has some pressure, downward pressure. At the same time, the profit margin, etc., all show still quite some weakness.
What's going to be the turning point? Do you see, is it on the horizon, a turning point for the deflationary trend?
I would say yes, because this situation will need the government intervention to step out. Basically, if we look at China's history, this is not the first time we see the kind of extended period of deflation on the PPI. And oftentimes we see both supply and demand side of measures in order to pull the economy out of the deflation. And right now we see some measures being deployed. For example, the trading program to some extent help improve the capacity utilization in certain industries. And then we have seen the good sales covered by the trading program seem to be going well. But more needs to be done. And we see there's a push for merger acquisition. This is certainly another effort. The government wants to help cut the overcapacity, and probably more measures are on the pipeline.
You mentioned maybe more M&A. We see price wars in autos, food delivery now as well. I mean, are you expected to see any sort of consolidation in this space, or is it going to be a persistent sign of domestic weakness across some of these sectors, you think?
Well, for the auto, we have basically seen there's the price war, and then cutthroat competition to some extent remind me of what we saw in the last century on the color TV. Yeah. Also very brutal price war among the manufacturers. And toward the end, we see a lot of smaller manufacturers basically couldn't survive, and we end up with an equilibrium. But that tend to be a relatively long process, several years. And here we see the CSAC, the regulator for the state-owned enterprises, start to talk more about letting the big ones to acquire the smaller ones. And also, it's much needed to make the exit channel easy.
Isn't the CPI now deflation now for 4 consecutive months? Isn't it really a representation of the broader lack of confidence at the household as well? We haven't seen much of a floor, a solid perpetual floor on the property sector. And again, at the backdrop of all this is the increased trade friction with the United States, pinning more hopes that some sort of lasting truce can happen, maybe not in London, but down the road.
Well, we look at the basically the consumer confidence survey. We see some improvement. I think one big reason is still the income outlook isn't so rosy for a lot of households. So that has become a pressure. If we look at the structure of the CPI, core CPI, pretty much doesn't change much, except we see during basically after the Chinese New Year, there's a softness, and now it's more or less back to the level. So I think the key is still trying to improve the income for the household and also improve the income outlook.
I was going to get your take on trade that could be coming up any hour, any minute now. Are we likely to see this kind of front loading still support exports, and for how much longer do you think?
Yes, we continue to see the front-loading behavior, and actually this month we expect the export continue to expand by 7% year on year. I think to some extent it will depend on how the trade talks continue. If there's kind of meaningful breakthrough, which people believe can sustain, then I think probably we will see things normalize quite a bit.
What kind of policy response are you expecting in the next few months as we head into the doldrums of the summer, if you will, the slower months of the summer? Is a lot of it dependent on the success of these talks that are happening in London, as far as less stimulus potentially is needed if those tariffs are going to remain low for a longer time?
Well, actually, that seemed to be quite some consensus for a while on the market. People worry about if there's breakthrough on trade talks and there's not enough stimulus. Okay. But I think of it from a different perspective, because a lot of problems China need to tackle seem to be structural problems. It had been debating for many years. And
the pension reform is one, a yes. huge one. Yeah.
Definitely. We might see some acceleration, especially this is a year of the 14th five-year plan, basically ramp up, and we enter a new five-year plan. So we see this, and also improvement on public services. By the way, that can help in a big way to crowding the private service consumption. So I think that's a way to go on top of the existing trading program, etc.
But I'm wondering, in the meantime, when you take a look at where tariffs stand, I mean, U.S. tariffs on Chinese goods still stand around 40%. What is your baseline on where that level is going to be in the next 3 to 6 months or so?
Well, actually, our baseline is in the interim. It probably will be something around 50%, including the 20% already effective under Trump 1.0. So that means 30% extra. But the structural might be different. The fentanyl-related tariff might be canceled, but in some strategic sectors, I think U.S. might hike tariffs.
I think that's a low-hanging fruit in talks, isn't it? The fentanyl issue.
Yeah.
I think if China just pledges a certain number of steps to they don't necessarily have to solve the fentanyl problem. They just have to pledge to do something about it, right? So that's perhaps a low-hanging fruit. My previous question was about policy response, and now I'll be in China most of next week and the week following. There's also going to be the Lujiazui Forum. We're expecting some significant policy announcements. That's what we're hearing. That's what the buzz is about. Pan Gongsheng, the PBOC governor, is going to be giving a speech. What are you expecting? Can there be a tectonic shift in policy coming from a speech from the PBOC governor?
Actually, I don't think there's a tectonic shift. Probably we will see some introduction of new monetary policy tools. There was a talk about 500 billion new tool to support new infrastructure investment. I think Bloomberg also reported this last week. So we probably will see some new mechanism, how that works. But to be honest, I think for China, it seems like they prefer structural solution for structural problems.
Structural solution for structural problems. You mentioned you have a report on pension reform as well. I mean, how do you see that playing out, especially with the amount of household savings that are being built up right now amongst some of the households in China?
Yes, indeed. So I think for China's pension system, they now have Pillar 1, 2, 3. For the massive saving, I think that probably will fall into Pillar 2 or 3. basically an individual account. So the way to do it is to improve investor protection, improve the corporate governance, to crowding more investment into the capital market, especially stock market, and at the same time to give enough kind of a tax incentive for people to do so.
We're here in the Hong Kong region, the Greater Bay. You had a report, I believe, just recently about what kind of financial innovation and development could be obviously born here and then translated to the Greater Bay. There's been so much talk about the potential. What's going to be the real progress that you see?
Yes, indeed. So this is not a new topic, but the real progress, I think, will lie in how the different jurisdictions can really tackle some hurdle in terms of the talent flow, in particular, I think, because capital flow relatively easier. We have different connect program and data flow as well. I think once there's a clear business model for Hong Kong, Shenzhen, Guangzhou, and the broader GBA to work together, then that would be the breakthrough point.
Okay.
Jing Liu, thank you. HSBC Global Research Greater China Chief Economist joining us here right now. We continue to see now this equity rally continuing here today in the mainland. You see how the onshore market is doing. Still seeing gains about 0.25%. HSI continue to see 250 points on the board there. 8 shares also up by 1%. Playing more ahead. This is Bloomberg. We are checking AI chip stocks here, and yeah, they seem to be flying here this morning on the back of the scoop. Pretty big one here on a big investment coming through from Meta there, Steve.
Yeah, that's right. Meta is said to be in talks to make a multi-billion-dollar investment into artificial intelligence startup Scale AI. Sources say the financing could exceed $10 billion in value. Let's bring in Bloomberg's Nuli Purnell. So, Nuli, tell us about this. What's Meta up to, and why should we be really focusing on Scale?
Yeah, well, if you need evidence that Mark Zuckerberg wants to invest in AI, just look at this. As you said, expected to be $10 billion or more. He said they want to invest up to $65 billion this year. It could be Meta's biggest ever external AI investment, and it'd be a little bit of a departure. So far, they've really kind of invested more resources in-house into building out Llama, their LLM, and some other systems. This would be more akin to Microsoft investing in OpenAI, but a big number. We've reported, of course, a deal not done yet, might not happen, but evidence that Zuckerberg is definitely into AI.
Tell us about Scale. What do they do?
They're an interesting company. They're based in San Francisco, founded in 2016, so long before ChatGPT kind of kicked off the generative AI boom. What they do is interesting. It's the kind of less sexy part of AI, but they have human contractors all over the world who help label data. So you get images, you get text into these systems. You need a person to make sure if you're querying an Apple or a school book or whatever it is that those are those things that it's showing. So they have contractors all over the world. We've reported that they were close to $1 billion in revenue last year, maybe double that for this year. So an interesting company and kind of the nuts and bolts, the back end of these AI systems.
Yeah. So what does it tell you about the importance, obviously, of how they collate the data? Because there's chips, obviously, we talk a lot about with the AI. There's talent, and then there's the data. And there's a lot more synthetic AI assessment of that data as well. And they're doing it in places like the Philippines and Kenya and elsewhere.
Yeah, that's right. We've reported on some of their operations all around the world. I think it shows how complex these systems are. And, you try some of these cutting-edge tools even now, and you see that they're still making mistakes. And you need really people in the system to be checking stuff, confirming. There's so much nuance. It's really hard. These are hard systems, and it just shows that you're still not just, this is not early days of AI. You need it going forward. That's why Zuckerberg is looking at it and saying it's a promising company, I think.
Newly, thank you, Newly Purnell there with that Bloomberg scoop. And it is certainly seeing things move here this morning on the back of that. Some other stories that we're tracking for you today. Bloomberg's been told that TikTok owner ByteDance is replacing U.S. hired staff in Seattle with managers connected to China after sales on its e-commerce platform fell short in America. Sources say TikTok Shop had to scrap a goal of increasing its U.S. business tenfold last year to $17.5 billion. We're told more than 100 employees have left or been fired amid confusion over leadership. Boeing has started shipping commercial jets to China for the first time since early April. Flight tracking websites show a Boeing 737 MAX is now on its way from Guam to Zhoushan in China, where the company finalizes delivery of that model for domestic customers. The resumption of China deliveries comes with top-level trade talks due to begin later Monday in London.
All right, well, turning to South Korea, where small investors are trying to shake up the country's corporate landscape using social media platforms and dedicated shareholder apps. They're pushing for better governance, hoping to give a boost to the country's famously undervalued stocks. Bloomberg's Sherry An reports.
Small investors in South Korea are leveraging online platforms to drive big changes in Korea Inc. Yvonne is an art instructor by day and a shareholder with a mission by night. He's poured more than half of his investments into SK Inc. and SK Networks and is now using that stake to push for change.
Compared to advanced countries, Korean companies lag in terms of legal and ethical standards. Shareholders are more advanced in awareness, but company owners, the so-called real powers, haven't caught up yet.
One is just one of South Korea's so-called ant-investors that are using apps such as Act, Naver, and KakaoTalk to band together and push for corporate reforms.
ACT is a platform for minority shareholders. Through My Data authentication, shareholders verify their identity and can use electronic proxy voting at general meetings. ACT currently has 110,000 users, which is more than double the figure from last year.
Minority shareholders are now starting to deliver change. Medical company Oscotex scrapped plans to reappoint its founder as CEO, while other firms replaced auditors as smallholders pushed for better governance. Shareholders filed 168 proposals in the most recent round of annual general meetings, a jump of more than 80% from 2021. And foreign activist funds are also zeroing in on South Korea.
There does seem to be that dynamic for change across the board, so we're hopeful that that will play through to better performance, better governance, and critically better returns at some of these companies that are listed on the stock market there.
Newly elected President Lee Jae-myung has promised bold reforms, vowing to strengthen minority shareholder rights and push the KOSPI to 5,000, double the current level.
Global investors will be watching to see whether the new administration can turn the long-standing Korea discount into a Korea premium. Sherry An, Bloomberg, Seoul.
And subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages. Check it out at TV Go.
And welcome back to the China Show. Here are some of the stories we are following. China says negotiations with the European Union on setting minimum prices for Chinese EVs have entered the final stages. The bloc imposed steep tariffs on Chinese EV imports last year, alleging state subsidies give the country's vehicles an unfair advantage. China's Commerce Ministry says both parties have instructed their working groups to step up efforts to resolve their differences. The group behind a humanitarian aid ship heading for Gaza says it's been boarded by the Israeli military. AFP quotes Israel's foreign ministry as saying the boat has been redirected to Israel. The Freedom Flotilla coalition vessel is carrying activists, including Sweden's Greta Thunberg. The group had attempted to reach Gaza last month when it said its ship was disabled by a drone strike. And Ukraine has rejected Moscow's claim that Russian ground troops have entered the central region of Dnipro for the first time. It's one of Ukraine's most populated and industrialized areas. Russia's ground war has picked up speed again, with units nearing a regional capital in Ukraine's northeast. Prospects for a U.S.-brokered ceasefire remain elusive, although a prisoner swap appears on track to happen this week.
All right, we're taking a look at when it comes to what we saw in that CPI data out of China. So, yeah, it was better than expected when it comes to the CPI print. But, yes, could have been just a one-off given just the holidays and the like. But, yes, what we heard from HSBC is that, persistent deflation is still very much entrenched in the economy here right now. PPI prices also was worse than expected at 3.3% in contraction. You take a look at how markets are doing with all that. It looks like they shrugged it off because it's all about trade talks here this morning. And take a look at how rare earths are doing. One of which is limit up here right now. So there is talks that China did approve some exports of rare earths ahead of those talks in London. So that certainly is why we're seeing some of these rare earth stocks doing very well here this morning. And tech seems to be catching a massive bid as well on the back of the optimism and hope around what could come out of these negotiations in London. So there you go. HS Tech is at session highs up more than 2%. It's really led by the likes of Meituan, JD, Kuaishou, all up by close to 4% here right now. And we're watching very much the ZTO, Express, Medeo Group. So these two stocks are now going to be included in the HSI to join that index. Medeo Group is down some 2%. I believe it's one of the rare losers on HSI here this morning. ZTO Express is actually seeing some gains. So certainly there's going to be a lot of talk about what happens in London. Steve, I think that's all really the market cares about, at least for today, because it's really going to be about the rare earth side of things. As you mentioned, right? This is Beijing's leveraging tool, the biggest marketing tool that they have. Are they really going to be willing to loosen a bit more on that?
Yeah, I think that is the big key, and they won't be loosening it necessarily before these talks. That will be a lever that they have. We're also hearing from sources and from state media that Xi Jinping has probably instructed He Lifeng to kind of impress upon the U.S. delegation for the Trump administration perhaps to rein in the China hawks a little bit to make this relationship go more smoothly. Yeah. And that's one reason why Xi Jinping decided to go ahead and acquiesce to the demands of Donald Trump and have that phone call last week. Now they need to build on that momentum. As you said, London is calling. Yeah. Will it be a clash or music?
And Howard Lutnick's going to be there, which is interesting, right? To bring the Commerce Secretary in. Is that a signal that maybe some of these tech restrictions might be something that's going to be in these negotiations as well? Something that China has been complaining about and wants to be addressed by the U.S. as well? Absolutely.
I think chips and, again, rare earths is what we're going to be talking about. Well, it's the new economy anyway.
Yeah, it is. We're going to have much more coming up the next hour. You're watching The China Show. Happy Monday, and we're looking at markets, and Hang Seng is doing very well here right now. We're up about 1% here this morning, and certainly there's a lot of optimism and good news when it comes to the trade front, right? So negotiations could be happening later on, or are going to be happening later on in London. There's a big delegation, including the likes of Howard Lutnick from the U.S. Commerce Secretary, to come and join in on these talks as well. So rare earths, chips, student visas, maybe tariff levels. We'll see what sort of outcomes we could get.
But last week as well, Howard Lutnick was there talking about needing better enforcement, more officers to enforce the export controls to China. So he's played a little bit of the role of a hawk on China.
And it's become much more of a central focus, it seems, those export controls. Yeah. Not just when it comes to rare earths. I think we'll learn a little bit more, maybe on tech restrictions as well. We'll take a look at the markets here right now. We talk about equities doing very well in the face of all this good news, right? Depends on what comes out. Certainly, as Derek Walbrecht told us in the last hour, it's all going to be about the readouts that come out from the U.S. and China and whether there is actually a match and any sort of consensus that has been reached on those key topics. We're also watching the CPI numbers that came through here. Deflation continues to be what's happening in the Chinese consumer. So we did see, once again, as these price wars rage on in the auto space and the like, we are seeing maybe bonds slightly a bit up here this morning. Not a whole lot of movement, though. But Asia, ex-China, the rest of the world and the region is looking like this here right now. But the chip stocks are doing very well as well. There was that scoop about Meta investing in Scale. That certainly has lifted a lot of the AI chip-related stocks here in the region. That's why you're seeing Taiwan doing quite well. Nikkei is up some 1%, and the Kospi continuing on in bull market territory here post-election as well. So stocks are doing quite well. U.S. futures, though, slightly on the heavy side. So is the U.S. dollar. That's why we're seeing strength in the yen, renminbi here this morning as well. Treasury yields, at least after that sell-off on Friday on the back of that U.S. jobs report, that stabilized a little bit. But we are seeing a little bit of a movement upward when it comes to yields in the JGB market. But yeah, there's that 30-year bond auction in the U.S., Steve, this week that we have to deal with too.
Yeah, the U.S. Treasury is facing those twin challenges in the form of this week's inflation data and the longer-term.
It's supposed to be a routine thing, but then it's become a crucial test for the market as well. Yeah, let's get the market action and what to expect here this week and bring in Mary Nicola. She joins us from our MLive team. Mary, let's start with the trade talks and all that. It seems like equities are really kind of optimistic about what could come. But what really you think is going to be in store this week?
Yeah, I think it's still about the sentiment-driven headlines and what's coming through from the trade talks that will really shift equities and steer them in the direction that they will go to. So if we look at, there was a few stumbles over the last week in terms of rising tensions between U.S. and China, and that really put a damper on sentiment. And I think what they need is more enforcement that things are moving well, that trade talks are progressing, and that's still absolutely crucial. So we're still in a world where headlines are driving sentiment. We're still in that environment, and that, of course, for equity markets will be absolutely critical. But if you look at the bond markets are facing a different challenge. Now we've got a 30-year auction in the U.S. and then CPI. But for the 30-year auction, I think that'll be the more critical test, because a lot of the fact is that we know that the longer dated bonds have been under significant pressure because of what we're seeing from the tax and spending bill, and there are concerns about fiscal profligacy. So essentially, if there is weak demand, that really could spur a negative sentiment, not only in the bond markets, but also weigh on the equity markets as well.
And, again, the 30-year, we're approaching that psychologically sensitive 5% yield mark as well. So we really need to be focusing in on that in addition to the inflation data, right?
Absolutely. And I think that's going to be the critical thing this week. So inflation data, we saw already that the job market is holding up. So it gives the Fed a little bit more time to really assess the situation. But I think also if you're looking at inflation, the problem with inflation is that if we're not seeing the pass-through yet coming from tariffs, you could see that the Fed becomes a little bit more cautious. But either way, when it comes down to if you're looking at what's going to be more impactful on the bond markets, whether it's CPI or whether it's the bond market, it really comes down to the bond auctions that's going to have the greater impact. And of course, we've seen the impact from JGBs last week and what we saw from the auctions there. And then, of course, there is this scrutiny on fiscal spending in the U.S. with the tax and spending bill in the Senate right now, and talks looming over how that unfolds is going to be absolutely critical in terms of what is the demand for the 30-year bond auction.
All right, Bloomberg MLive strategist Mary Nicola, thanks for joining us. Well, top trade negotiators from the U.S. and China are set for talks in London later Monday aimed at diffusing tensions over Beijing's rare earth export restrictions. The Trump administration wants to restore the flow of critical minerals, crucial for everything from cell phones and EVs to military systems.
Those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva. And President Trump, being a deal maker, talked with President Xi, and he said, let's take, our senior guys, the people who are the same level as you, let's have them meet somewhere, and let's get these things cleared up, and then we'll clear up what you don't like that we've agreed to release on our side.
For more, Bloomberg's China reporter Alan Wong joins us for more. So the bar is set high for expectations because following the Geneva truce, if you will, things kind of spiraled out of control as far as each side was accusing the others of violating the nature and intent of that truce. We had the phone call last week that helped, lower the temperature a bit. But what would be considered success for either side come Monday, Tuesday, Wednesday? Who knows how long it will go in these next talks in London?
Yeah, we know that the Chinese top negotiator, He Lifeng, will be in London through Friday, so they set aside plenty of time for any trade talks. Whether or not we'll see positive sentiments coming out of the meetings, we shall know in a couple hours if there are headlines moving on that. And we'll be watching very closely at whether they could agree on the all-important flow of rare earths, as you talked about. And it's something that China would be loath to open the floodgates to any country, not just the United States, because it's seen as a very important strategic resource. And China has a dominance in the processing and the output of those very important materials for manufacturing.
So you mentioned, right, it's a very big negotiating tool that they have. What could we look for in terms of the details and what could be agreed upon? And what other sort of things can China get out of it if they do lower a little bit of those maybe restrictions?
I think it's going to be some sort of a trade between the U.S.'s own export controls, because there's something that China wants from the United States, which is technology that it uses in, for example, designing semiconductors. So those software and other technologies the U.S. has a stranglehold on, and China needs to for its next generation technology and honestly its next phase of growth. So if China could get that from the U.S., either explicitly or implicitly, that would be a sign that both sides have agreed on something to move forward with the trade talks.
What can we possibly expect in the near term as the Ministry of Commerce is talking about they're getting to the final stages of negotiations with the European Union on a minimum price mechanism, which actually doesn't sound too bad in lieu of tariffs. For the Chinese automakers, it's a way to raise their prices. That's a good thing, and get access to the European market. The European car makers may be a little bit concerned, but do you think this is going to be passing in the coming months, and that will essentially replace the existing tariffs that are upwards of 45, 48%?
Yeah, I think that it will also be a hard negotiation because there's a lot of interest to balance. For example, European car makers, they certainly would want to have less competition from the Chinese side. But at the same time, we also seeing the price war in China driving prices down and certainly putting price pressures on the car makers and their profit margins. So both sides have something that they want, and it'll be probably a hard negotiation. In terms of time frame, I personally don't know, but it'll be something very important to both economies and also all the companies involved in the deal.
And ahead of the EU-China summit that comes up at the end of July, where there need to be deliverables, right, in addition to Airbus.
Exactly. And I would imagine that because the trade negotiations between the U.S. and China is so uncertain, even though after the call between Xi and Trump, the relations did improve, but the uncertainty still looms. I think that gives the EU and China both a reason to be more proactive in trying to reach a deal.
All right, Alan. Thank you, Alan Wong, there, our China economy and government editor, joining us here in our studios. Yeah, it's interesting, right? There's a new survey out. When you take a look at what some U.S. companies are talking about, they surveyed about more than 100 or so. Those that are operating in China, Steve, and they really found that most are not really planning to leave, despite some of the challenges that have been posed by these tariffs, right? So that American Chamber of Commerce, they found 21% would actually shift more production and sales into China if U.S. tariffs go back up after the 90-day truce.
Well, 13% would move production from China to other countries, but 41% would not make significant changes. An opinion piece in the Global Times also refers to the AMCHAM survey, saying American companies have given a vote of confidence in U.S.-China trade ties by not planning to leave. It goes on to say that businesses understand that economic globalization is an irreversible historical trend, and any attempt to reverse this comes at a high cost.
Yeah, meanwhile, a Xinhua News commentary says the crux of the problem around trade talks is Washington's mindset of generalizing economic and trade issues with security issues. Now, it also warns that this could become the biggest obstacle to win-win cooperation between the two countries? Because it's interesting, right? When you take a look at, you mentioned auto tariffs and the like, it's really been kind of thrown into the whole discussions with where tariff levels are right now. They're supposed to be separate as the U.S. wants to, but it's becoming increasingly connected in some ways.
Yeah, so you have separate types of tariffs
Yes.
as well. So, you know, on EVs, and then you have also steel.
Yes.
And then there are other sectoral vulnerabilities, if you will, that could alter trade, not just on a country-by-country basis. So there's lots to work through.
And keep in mind, right, I think, it's June 9th today? We're 1 month away exactly from that 90-day truce from ending with the EU, with, I think, 6 other countries. China has until August at least, but we're only talking about 1 month away. The clock is really ticking right now.
Yeah, I think that's why we are having laser focus on these talks that are happening in London and how successful they could potentially be, how many days they will last, and if there can be some, you know, measurable progress.
Yeah. I mean, so far we only have a UK deal, right, with the US. So
that's the only one.
That's the only one. Yep. All right, still ahead. We're going to get the take from Colliers joining us for a closer look at how Hong Kong's property sector is faring after a drop. Massive drop, really, when it comes to HIBOR. We'll take a look at what that means for all things property coming up. This is Bloomberg. You're looking at live pictures now out of San Francisco as we continue to see a protest emerging there. In some ways, in solidarity, what we're seeing with what's going on in Los Angeles, where anti-deportation protests have been going on for several days now and really led to clashes between law enforcement and demonstrators. And yeah, you have the likes of President Donald Trump and the governor of California, Gavin Newsom, trading barbs over who is responsible for the chaos, Steve.
Yeah, those demonstrations over U.S. immigration raids have escalated for a third day in a row in the Los Angeles area, with vehicles torched and tear gas fired. Earlier, President Trump wouldn't rule out deploying U.S. Marines, something that Pete Hegseth has talked about. Donald Trump saying, if needed, it's possible, after sending in thousands of National Guard troops. Here's the president.
We're going to have troops everywhere. We're not going to let this happen to our country. We're not going to let our country be torn apart like it was under Biden and his auto pen.
What's the bar for sending Marines to...
The bar is what I think it is. I mean, if we see danger to our country and to our citizens, we'll be very, very strong in terms of law and order. It's about law and order.
And Bloomberg senior editor Bill Ferries joins us now from Singapore. So, Bill, how are you reading what's happening on the streets of Los Angeles and to a lesser degree in San Francisco? The governor, Gavin Newsom, has talked about the legality of such moves. What kind of challenge does this put towards the legal system in the United States and democracy as a whole? Big question.
This is the first, or at least the biggest pushback we've seen on President Trump's immigration policies. We know that the federal government says it's been trying to deport about 2,000 people a day. Many of those people coming from California, Southern California in particular. But this is like the first kind of widespread pushback. The big question is whether this becomes more violent and whether it spreads nationally. We've seen you showed the images from San Francisco, some protests there. It is very unusual in the U.S. context for the president to send in National Guard in this kind of a situation. That's usually something that the governors do historically to deal with situations of law and order when local police aren't in a position to handle the situation. Governor Newsom saying that what President Trump has done here with the deployment of hundreds and up to potentially 2,000 National Guard troops has really inflamed the situation and made it worse. The two of them trading barbs back and forth. It's hard to see how this situation de-escalates in the coming days and the coming hours unless protesters voluntarily break up. We've obviously seen a lot of those violent clashes. The concern is that that will get worse and perhaps spread to other cities if this doesn't calm down soon.
What does this tell us, broadly speaking, with what some of these kind of heavily Democratic states And how do they deal with these clashes with Trump's agenda then, Bill?
Yeah, I mean, this is definitely playing into the polarized politics of the U.S. California, obviously a very Democratic state with a Democratic governor and a Democratic mayor there in Los Angeles, very much kind of at the forefront of more leftist politics, which the Trump administration has been pushing back on for quite a while. So that kind of dynamic, I think, is not going to change. A year ago at this point, we were talking about those campus protests, the pro-Palestinian, anti-Semitic campus protests that were going on around the country. I think the concern is that you have a situation that's been fairly localized in California that starts to take off if this situation isn't somehow resolved or de-escalated in the coming days.
Bill, thank you. Bill Ferry's there with an update what's going on in Los Angeles and overall the state of California here right now. To other political stories that we're following for you today, Thailand and Cambodia have agreed to de-escalate a border standoff there. The two sides will make adjustments to their military forces in the conflict zone following an exchange of gunfire between troops in late May. The de-escalation comes ahead of talks set for June 14th in Phnom Penh as the two nations work towards restoring normal bilateral relations. A U.S. trade team has extended stay in India, signaling progress ahead of a July deadline for a tariff agreement. Sources say the team will now remain until Tuesday to continue discussions originally scheduled for just 2 days last week. Negotiators are working on a phased trade deal, and we're told most of the issues may be finalized within a week. We got plenty more ahead. This is Bloomberg.
And welcome back. You're watching The China Show on Bloomberg. The U.S. Labor Secretary expects the pace of job creation to continue after the economy added 139,000 new jobs in May. Lori Chavez-DeRemer also telling Bloomberg the Trump administration is focused on protecting American workers first.
We are excited, 139,000 new jobs, and that President Trump, with his dedication and his leadership, really has beat expectations for the third month in a row. Our goal is to grow this economy and grow this workforce, and the president has done a wonderful job in accessing companies to invest in the workforce, and we're seeing it across the country. So while jobs are continuing to grow, and we might see a decrease at the federal level, which is another great thing that we've seen 22,000 jobs leave the federal public workforce, and we're seeing it at the local level. So there's a lot to look forward to. There's a lot that we're excited about, and we couldn't be more excited for this economy in this third month in a row of a growing jobs report.
What do you think is behind, though, the drop in the size of the labor force?
Well, what we want is to grow that labor force. We're seeing increases in construction jobs. We're seeing increases in transportation and in healthcare. While the manufacturing sector is holding steady, what we're excited about is the focus that the president has on the skilled workforce. Again, my part of this equation is to grow that workforce. And as we transition through this process of onshoring, and the president has done a wonderful job in negotiating some of these tariff talks, tens of trillions of dollars are being invested. This workforce is going to continue to grow.
The unemployment rate remains steady. A lot of economists will point to the fact that potentially it's for the wrong reasons, not because jobs are plentiful, but because workers are dropping out. Are you concerned that too many workers are dropping out, especially in some of these areas that are mostly filled with immigrants?
Well, certainly what we have seen in the last few months is that native-born Americans are the ones where the job growth is happening. That's exciting for the American people. We want to make sure that we're protecting the American worker first, and we want that labor participation rate to go up. I will tell you, unemployment is holding steady. That is a good thing for the American economy. We'll continue to focus on that as the president's executive order with 1 million apprentices across the nation, and also through an executive order that we're going to have the skilled workforce with AI. I'm telling you, and I'm confident that that workforce is going to continue to grow, and we're going to see these numbers continue to climb and unemployment rate continue to drop.
Do you foresee wage pressures potentially reemerging to fill jobs if there are fewer immigrants coming to the United States, which is a policy of this administration?
Well, I can tell you right now that, wage growth, hourly wage growth is up almost 4%. That's great for the American people, more money in their pockets. And with this one big, beautiful bill that the president is focused on, we are going to see no tax on tips, no tax on overtime. Do you know what that does for a family of four who possibly can put more money in their pocket? I can tell you this. One big, beautiful bill equals one big, beautiful workforce.
That was the U.S. Labor Secretary Lori Chavez-DeRemer there speaking with Bloomberg's Anne-Marie Hordern. And you take a look at how treasuries were doing after that jobs report, and we still seem to be holding some of the losses that we saw and those yields taking up higher, right? We're lower a little bit on the short end by about 3 basis points for the 2-year, but we're still holding around that 4% level for the short end of the curve. The 30-year is the one to watch, right? That's where we're going to see that 30-year bond auction later on Thursday here. $22 billion of bonds are going to be sold. And this is going to be the key test of where sentiment and demand is going to be, especially on the long end, right? As we say, we'll see if we reach that 5% once again for the 30-year yield this week if things don't go as planned. You take a look at how things are looking at for the rest of the market. It's the AI chip story. It's the rare earth story that seems to be bringing things afloat here this morning. You take a look at how some of these major chip makers are doing on the back of our scoop that Meta is in talks to invest in that startup Scale, a valuation of about $10 billion, I believe. So that certainly is lifting the AI trade here this morning. And the rare earth side of things here, that that China has seemed to start some of these approvals of rare earth exports there. So you see the likes of China rare earth up some 34% here this morning, some of which are limit up. We're watching the Gen Z consumption stocks. So it seems like the southbound inclusion. So we're watching some of the likes of Mixue Group, Gooming Holdings, and Blocks Group doing quite well here this morning on the back of that inclusion story. And for those who are traveling to Japan, this is one to watch, right? So there is a report in the Nikkei saying that the government is considering an option to abolish the consumption tax exemption for foreign visitors to the country. So travel stocks very much in focus there. For anyone,
also floating a proposal to raise the international tourist tax for foreign visitors levied when they are departing the country. I think foreigners getting a break because of the yen's value at 145.
Yeah, that's true. So maybe, I don't know. Is that going to deter people from going? We'll see.
Because there's been a boom of travel.
Yeah,
for sure.
Hong Kong people love going there. We'll see how things play out there. We got plenty more ahead, obviously. Focusing on trade talks, bond auctions. We have big data coming up this week. That trade data out of China still could be coming any minute, any hour now. Plenty more ahead. This is Bloomberg. Close to 11:30 in Japan here right now. We're watching as we get into that lunch break in Tokyo. And yeah, stocks are doing quite well. We're seeing still shares up 1% on the Nikkei as well. Topics is also catching a bid here. And that yen strength continues here on the back of dollar weakness. So we're at 144 levels right now. Nomura had a pretty interesting note, Steve, talking about the fact that the U.S. and Japan, they've been talking about a little bit about maybe the Treasury urging the BOJ to lift rates. You also have the whole repatriation risk as well. They're still thinking 6% appreciation for the yen in the coming months or so.
Yeah, but the yen hasn't moved much, even throughout all the gyrations of talk from the U.S. And I think the BOJ is a bit cautious right now as well. It's still hanging right there around 144, 145 right now. But we'll have to see whether that appreciation trend could potentially get a little bit more wings.
Yep, we're watching JGB yields as well, taking a slightly higher here, about 3 basis points for your 10-year. We do have that BOJ meeting, I think, in a few weeks or so. So they might talk about what the whole issuance sort of picture, or at least how Japan's going to fare there as well. So there you go. Asia is doing this. We're doing pretty well in the equity market, thanks to Japan, thanks to the likes of the Kospi, thanks to Hong Kong here this morning. That's really kind of lifting the equity space overall here in the region. So your MXAP is up close to 1%. U.S. futures are still a little bit heavy, though. Keep in mind, U.S. dollar as well. We've seen a little bit more weakness on the greenback here this morning. But most sectors are basically in the green, with the exception of the energy space right now.
We're looking at Hong Kong's property sector now following a drop in the one-month HIBOR that banks use to price mortgages. The one-month rate is currently near its lowest since 2022, resulting in lower payments for borrowers. That's helped give home sales a boost. Financial Hub's top home builder, Sun Honggae, says it's more than sold the 1,500 units since late April. New World Development also says one of its luxury residential projects has received about 1,300 applications. That's 12 times the number of available units, according to Ming Pao.
All right, shares in Hong Kong developers, meanwhile, have also been a bright spot in equity markets. You take a look at the Hang Seng Property Index, right? It's risen more than 4% in the last 3 months. Now, the HSI has been flat, while mainland developers have also lost more than 20%. Let's bring in our big panel here right now and do a deep dive on this. Our Bloomberg Intelligence APAC senior real estate analyst Patrick Wong is here. Also, we're joined by Kathy Lee, head of research and retail consultancy at Colliers. Patrick, I'll start with you. You've been writing a lot about this. HIBOR, the fact that we're talking about the lows that we are seeing right now, how beneficial is it to the property market here?
Yeah, this really amazing to see the HIBOR is coming down a lot, right? Yeah. Before that, it's almost like 4% or something. Now it's only 0.6%, and then it have a big impact on the mortgage payment, right? So look at the situation now, right? When the mortgage rate before that is at over 4%, about 9 months ago, and then now it's only less than 2%, right? So that's a huge impact on the mortgage repayment. So it's like looks like for those just buy properties, if you use 4% versus like below 2%, then you save almost like 20% of the interest, right? So that is very significant situation. And home prices already down 30%, right, over the past 4 years. So it makes the situation more amazing for lots of home buyers. They are panting up. They wait for the situation that the price is stabilizing. Yeah. They will come to the market to buy. So that is more positive to the situation that we look like.
Well, let's bring in Kathy here, Kathy Lee. So we've just been talking about HIBOR. Is this sort of an aberration, or do you think the trend will continue? Because, of course, we know the Hong Kong authorities have been selling Hong Kong dollars. There's been also a flood of liquidity for the CATL listing. It's obviously driven down borrowing costs on the HIBOR. And I think the average of Bloomberg Economics survey for the 3-month HIBOR is about, by the end of second quarter, we'll be about 2.88%. Is this trend going to continue, or are we going to go back to the normal fundamentals of kind of pegging to what the Fed does, where rates are still pretty high?
Yeah, I agree. Yeah, because I think that like it's still quite down to like the inflation situations back into the U.S. because like Hong Kong dollars is still like pegging with the U.S. dollar. Is any changes like to the Fed rate in U.S. that would definitely have some knock-on impacts on Hong Kong's interest rate. So I think like the CPI, they are assuming that the May CPI in U.S. maybe will come back up again. So that may defer like the U.S. government to the decision whether they will lower the rates very soon. So that maybe have some other impacts on the whether like the interest rates in Hong Kong will continue to drop. Hopefully, but like once it's stabilizing, definitely we'll have a boost like to the residential market. And you can see like the recent transaction volume has been increased quite a lot. And I think that's a good sign like for any home buyers. They can see like the price stabilization, as Patrick has mentioned. Also the rates, even though they may be gone up, but like may not be as high as before. And then that maybe is a good time for them to enter into the market to find their, the property they like.
You mentioned volumes are picking up. You said prices are solid. What does that mean in terms of the recovery that you're expecting in terms of prices?
Yeah, I think for this year, we still forecast the price will remain relatively stable. We won't see a big, price improvement because we still got a lot of like inventory in the first-hand market, which take up a lot of the purchasing powers. And then we all know that like most of the developers in Hong Kong, they still aggressively pricing, their projects, which they want to have cash flows for their company. So that means like there's a lot of competition between the second-hand and the first-hand markets. So that means the price will remain relatively stable because for the first 4 months, we still see price drops over 1% in the first 4 months of this year. So we won't see, the price will suddenly, rebound for another maybe 2 or 5%. So I think that for the whole year forecast, we remain relatively like stable.
Patrick, how do you respond? How are prices and how's the market going to go in the near term and medium term?
Yeah, I think we see a situation recently like New World Development. They are cutting price a bit to sell the projects, which is amazing.
They need cash.
Yeah, they need cash, right? Right? It's New World. And then you see like Sun Hung Kai, they're also doing pretty well in terms of home sales. So I'm actually a bit more positive that the situation can turn around faster. But provided, as what Kathy mentioned, right, the HIBOR really need to be stay at lower level for quite a while. If that really happens, that things may turn faster.
Is it just the property, the residential side that we should be optimistic about, or are you looking at retail, office as well?
Oh, I think office, retail, more challenging.
Yeah.
Especially office, right? We see the price down like almost half, right?
Yeah.
And then the situation is even worse when we have lots of distress sales upcoming, and then we also see the like couple of developers we just mentioned, right?
Yeah.
That is some of them if they want to cash out, right, or they do the refinancing, right? That is also pretty challenging, right? The refinancing we see like New World is doing, right? If they really patch some of the assets for like bank financing, the challenge is that if the commercial asset price keep falling further, right, that will also be a challenge for them.
Yeah, I agree with that because, the office leasing market is still quite challenging because we have a lot of new supply for the last 2 years. We still have quite over 5.5 million of new office space coming into market in this year and next year, and then the vacancy rate for grade office already over 17%. We are expecting the office vacancy may come up to 20% by the end of this year. So that means that there's still a lot of competition among different landlords. And then the rents cannot recover very soon.
Is the flood of mainland Chinese companies that are coming to list here and also move into Hong Kong to fill the void where others may have pulled back, is that enough to maybe have a longer-term sustainability on price recovery in commercial? Retail is tough right now, obviously, with the high Hong Kong dollar as related to the peg with the U.S. dollar, but for the commercial real estate space.
Yeah, we do see a return of mainland capitals or mainland companies coming back to Hong Kong to set up their office, but that the leasing pattern or the demand patterns has changed compared before COVID. Before they come to take up large space, maybe over 5,000 or even 10,000 square feet of space, but now they're always the most of the demand actually are smaller size office, so maybe 2,000-3,000. Given we have such high volume of inventory or new supply, so the take up or absorptions of those existing space in the market will take a long time. So that means that no matter it's the rental or the price recovery will take longer time until the market absorb existing inventory in the market.
You mentioned some names in the Hong Kong developer space. Which could be the ones that could benefit the most from what's going on with HIBOR right now?
Yeah, I think if you look at the situation, right, if the HIBOR really coming down at this level, really low level, for those with really high debt, right, New World is good, right, if they can save lots of interest expenses, right? Could help them to save a little bit, right? In terms of the interest expenses and also sell the property faster.
Sure.
So that will be really better for them.
Back on the residential side, are we seeing the mainland interest keep up now that HIBOR is down? And what kind of policy response do you think is still necessary for a longer-term sustainability, whether it's on stamp duties or what?
I think the stamp duty already cut a lot, right? So basically it's nothing else. But the capital investment entry scheme, right, that the government, I think they also bring this up earlier this year, that in terms of the budget speech, they also mentioned about further relaxation. We still wait for what happened, right? Because this could also attract more mainland buyers to purchase the properties here in Hong Kong. So something that I think the government may need to respond faster.
Do you have a wish list of what you want to see from the government, Kathy?
I think they have done a lot for the past 2 years in terms of cutting back all those stamp duties and then relaxation of the entry schemes, as Patrick mentions. I think it's more kind of booster into the economy, so helping the overall economy improving, and then that will give some good signs and then positive impacts on the overall property market.
Are any major developers adding to their land bank at this time as things have improved?
Yeah, I think Sun Hung Kai, they're doing relatively positive that they bought a couple of lands over the past 12 months, right? And then we also see for example, Henderson Land or even CK Asset, potentially if they could convert some of the farmland, right, in the future, right? So long-term Metropolis is developing, so hopefully that we'll see more and more happening. But in the short term, honestly, right, we need the home prices to turning more positive, right, to attract developers to buy land more.
Yeah. What about Hong Kong developers and expanding to the mainland? Is that trend still something that we've seen in the past few years?
Yeah, I think they also cautious, right?
Yeah.
China property market is still very tough, right? So it makes the situation really drag on quite a lot until we see the really potential recovery in mainland China happening. Right? Hopefully, maybe end of the year or next year, but in short term, I think it's still challenging.
Yeah.
Kathy, what's your take on the northern metropolis? A pipe dream or reality that's going to happen?
It's a long-term project. We are talking over like 20 years of development. Some of the areas I think like will actually move faster. For example, the Hong Kong area. I think we quite have some high hope on that because like we will have news station in that, and then we will have like a cross-border railway provide in that area. So I think like it will come into stream slowly, but I think like we just need to see how the government is like cooperating with the other parts of the world.
Yep.
All right. Thank you so much.
Thanks,
our thanks to Patrick Wong, Bloomberg Intelligence APAC Senior Real Estate Analyst, also Kathy Lee, Head of Research and Retail Consultancy at Colliers. And of course, you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition. The newsletter is out every Thursday. You can sign up via Bloomberg.com/newsletters. Play more ahead. This is Bloomberg.
And welcome back. You're watching The China Show here on Bloomberg. Here are some of the major corporate stories we are following. Bloomberg's been told that TikTok owner ByteDance is replacing U.S.-hired staff in Seattle with managers connected to China after sales on its e-commerce platform fell short in America. Sources say TikTok Shop had to scrap a goal of increasing its U.S. business tenfold last year to $7.5 billion. We're told more than 100 employees have left or been fired amid confusion over leadership. And Boeing has started shipping commercial jets to China for the first time since early April. Flight tracking websites show a Boeing 737 MAX is now on its way from Guam in the Western Pacific to Zhoushan in China, where the company finalizes delivery of that model for domestic customers. The resumption of China deliveries comes with top-level trade talks due to begin later Monday in London.
All right, we are taking a look at when it comes to brokerages in South Korea that are actually rallying here this morning on the back of what we're seeing here, the new President Lee Jae-myung's pledge to boost the stock market and ramp up corporate governance reform. So you have the likes of Q1 Securities up 10% here on that optimism that he's vowed to revise the so-called commercial code to stamp out rubber stamping directors and strengthen board fiduciary duty to shareholders as well. So that certainly is what is driving that here today. And sticking to South Korea, right? Because small investors are trying to shake up the country's corporate landscape. Using social media platforms and dedicated shareholder apps, they're pushing for better governance, hoping to give a boost to the country's famously undervalued stocks. Sherry-Ann has more.
Small investors in South Korea are leveraging online platforms to drive big changes in Korea Inc. Yvonne is an art instructor by day and a shareholder with a mission by night. He's poured more than half of his investments into SK Inc. and SK Networks and is now using that stake to push for change.
Compared to advanced countries, Korean companies lag in terms of legal and ethical standards. Shareholders are more advanced in awareness, but company owners, the so-called real powers, haven't caught up yet.
One is just one of South Korea's so-called ant-investors that are using apps such as Act, Naver, and KakaoTalk to band together and push for corporate reforms.
ACT is a platform for minority shareholders. Through My Data authentication, shareholders verify their identity and can use electronic proxy voting at general meetings. ACT currently has 110,000 users, which is more than double the figure from last year.
Minority shareholders are now starting to deliver change. Medical company Oscotec scrapped plans to reappoint its founder as CEO, while other firms replaced auditors as smallholders pushed for better governance. Shareholders filed 168 proposals in the most recent round of annual general meetings, a jump of more than 80% from 2021. And foreign activist funds are also zeroing in on South Korea.
there does seem to be that dynamic for change across the board. So we're hopeful that that will play through to better performance, better governance, and critically better returns at some of these companies that are listed on the stock market there.
Newly elected President Lee Jae-myung has promised bold reforms, vowing to strengthen minority shareholder rights and push the Kospi to 5,000, double the current level.
Global investors will be watching to see whether the new administration can turn the long-standing Korea discount into a Korea premium. Sherian, Bloomberg, Seoul.
All right, subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions we talk about and become part of the conversation by sending us instant messages. Check it out at TV Go. All right, plenty more ahead. This is Bloomberg.
All right, it's a good day for Hong Kong here today. If you're long these markets and you take a look at how Hang Seng is doing, we're up some 1%. HS Tech is close to 3% gains here right now. So certainly there's a lot of optimism around the rare earth side of things and U.S. trade and China trade negotiations that are underway and could be happening later on today in London. So certainly that's the big sort of thing, the reason driver, I think, of stocks here this morning. And certainly there's a lot of talk about AI as well, with Meta making reportedly a big investment into AI. Let's bring in Lan-Ting too. She joins us from Singapore to walk us through what's really kind of driving this price action here this morning. Lan-Ting, is it really kind of just comes down to all these trade talks and what we're expected here later on today?
Yeah, there's definitely a sensation that people are trying to front load any potential good news coming out of the China-U.S. second round of trade talks. There is also a lot of optimism about the tech space right now because Meta's AI startup investment is really lifting sentiment in that sector. And also, if you look at the trading volume for Hang Seng, it's actually 66% above the 30-day average. So that is showing there is a lot of trading activity going on. And it's not just tech. Actually, in the healthcare space, there is just a lot of sort of bottom fishing going on because a recent conclusion of a U.S. pharmaceutical conference has made people believe that a lot of breakthroughs are happening in the Chinese pharmaceutical sector. And because the sector is so depressed from a recent peak, I believe it's about 66% below a recent peak. So there is a lot of value to be had. And people are talking about how there is a deep-seek moment going on in the pharmaceutical sector after what we saw in January in the tech sector in China.
And Lan-Ting, Steve here. I guess inflation data was pretty much in line with expectations. Didn't really move the needle, did it, for stocks?
Yeah, no, inflation is something that people consider backward looking. I think what is happening right now is some kind of expectation of a good outcome coming out of the U.S.-China talks. And China has already loosened rare earth regulation or restriction for the export ahead of the talks, showing that there is a bit of olive branch that Chinese government is throwing ahead of the talks. So there is more likelihood that something good may happen, although compared with what we saw a few weeks ago, I think that kind of sort of huge pause, that kind of breakthrough may not be likely this time around.
All right, Lan-Ting, thank you for the update. Lan-Ting, too, there, our managing editor for Asia Equities, joining us out of Singapore. So take a look at the markets and what's really driving all this. Yes, as Lan-Ting mentioned, right, it's the healthcare, the drug maker stocks that are rallying here this morning. And it's not just the tech space, but there you go. The likes of InnoCare Pharma, that's up some 15%. So this is the ASCO conference that Lan-Ting was just talking about here. Yeah, so the deep-seek moment in healthcare is what people are calling it, just given what we've been seeing. But healthcare basically as a top performer on the Hang Seng Composite Index, jumping as much as close to 5%. So certainly that is going to be the big mover here today, and a lot of optimism around that, and plenty of catalysts, as some analysts have flagged, in the healthcare space as well. You take a look at what we're expected here. So CPI was a bit of a dud. Well, we're watching trade numbers coming through that could be happening later on today as well, Steve. The expectation is still for exports to grow, but then again, it's all about the front loading, right?
Right. So 8.1 was the previous month. We're expecting the consensus estimate for exports in U.S. dollars year over year in May to be up 6%. Imports still, that's reflective of the fairly weak Chinese economy right now. Down, expected 0.8% in those numbers that we're likely to get earlier or later this morning. But again, that trade balance expected to continue to climb, and that's continued to be an issue at the backdrop of these talks in London.
Yeah, how sustainable are these numbers is certainly the big thing here. I mean, Bloomberg Economics says, the uncertainty around U.S. trade policy still means that the downside risks to exports are still quite significant here. But there is also a higher base to deal with. So coming from April, we might be seeing a bit of a reaction there on that front here. So certainly that's one to watch. And yeah, as we talked about, right, when you still have tariffs at around 40, or even HSBC says baseline 50% between U.S. and China, that's still a pretty high number.
It is a high number, but you're probably going to see some front loading still as we get to that August deadline for the pause to possibly be removed. It depends on these talks, how they go.
That's it for us here on the China Show.
London's
Insight
calling.
with Hassett and Ahmed is next.